Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, 13th day of July, 2016, and this is the Daily Report for Gold and Silver. After a fairly sizable drop yesterday, taking the market to an intraday low of approximately 1329, 1330. We've got a superlative recovery today. Gold currently trading up about $10, $11 on the day, trading at 1343. The low today has been 27.76, so we tested that low once again. The high, 13.45, so we're just a couple of dollars off of the high today. It's putting us into a scenario where I am simply waiting for confirmation on a candlestick pattern, which we will talk about, of course, on today's show, and actually issue a buy signal in gold. So traders, as I talked about in our opening statement, we are absolutely seeing the setup for a buy trigger in the market. And let me explain my sentiment and what is really predicating this call that we'll probably make later today, tonight, or tomorrow morning. Consider this second leg of the rally. And what I consider the first leg, of course, is the beginning of the year. Market's trading at 1050, comes in and trades to a first high that's sitting at about 1280. From there, we go into this series, this ABC correction, which takes us to a low at around 1200, and at the same time actually took us to a higher high, which is why we call it an irregular ABC correction, because the B wave is higher than wave one. Now, once that was in place and we actually concluded that, and that's what I believe we saw here when we hit this bottom, we hit our wave two. This is the conclusion of our wave one here. These are all minor counts, by the way, our wave two here. And so now we're entering wave three. So we're counting down the components really of this third wave. Now, impulse wave 3 cannot be the shortest of any of the other waves. So when we first look at size and structure of this current wave, we have to ascertain the actual distance that wave 1 actually moved. And that's what this one line here represents, because that's an extension. We start here, we go to the top here, and then we fix it. You can see the small line right here, and that's where we get these hash marks kind of to the side, 61, 1.23, because what that is referencing is if wave 3 is 61% of wave 1, that would take you to about 1330. So it's an important number that we want to look at, but it's simply not going to be the point in which we think we're going to conclude a wave 3, of course. Now, from there, we have this market when we actually ascertain the move that we have seen up till now from the bottom, which sits at around 1254, up to these tops at 1378. That actually gives us a 1-to-1 relationship. You can see that right here, 1-to-1. Now, typically on a impulse wave 3, it's certainly not going to be the shortest, but it tends to, especially when gold is running, be an extended rally of anywhere between 1.23 to 1.61%. Those fib numbers keep coming back. So with that in mind, we've then created a basic fib retracement, which begins at 1254, concludes at 1378, so we can determine this leg down and logical points to look for a resumption in that bullish move. And lo and behold, that number comes in at 1330. So we've got a harmonics now. Harmonics are simply where we're using two different fib time cycles and coming up with relatively the same number, the same answer. So that's an important level. As the market came down yesterday, let's go ahead, clear the screen and put up a pointer again. But as the market came down yesterday, lo and behold, it found some support above this 61%, but this is that 1330. This is a 38% retracement of the first, what I'm considering the first leg of this wave 3. So we have leg 1, we now have leg 2. I believe we're going to have leg 3 now of this third wave. At some point that might conclude, we'll get a retracement and then the final push up. Now, that being said, we want to position ourselves, obviously, for this play. And to do that, realize we use Elliott wave, we use Fibonacci retracement, and lastly, we add candlesticks for those triggers, and the triggers are what's so important. Take a look at these two candles here. These two candles represent a pattern called a piercing line. The current market scenario is one in which we opened at or below the prior close. This is, of course, a daily chart. And then we close at or above the midpoint of the red candle. That would be right here. And I believe that we have met that criteria, at least come very, very close. Now, in order to take this simple candlestick call, meaning a 2-day pattern, the most efficient way to do it in terms of safety is to wait for confirmation. Now, a confirming candle is going to be a candle in which you have a higher high, you have a higher low, and it is a green candle, means it closed above where it opened. It would look something like this. That would be your confirming candle for a piercing line, and upon that, that would be our trigger to actually issue the buy signal. So, as the market settles down and we start to form our next candle going into our overnight session, if we see some kind of rally ensue and we see that the market has not really questioned any of these lows, in other words, gone back to try to take them out, and we do see pressure moving to the upside, at that point, we will issue a buy signal. Silver also trading higher on the day. When we consider gold is up about 0.82%, 1.2% in terms of silver. So it is outperforming gold in terms of percentage gains. Currently trading at 20.40. As I said, up about 25 cents on the day. The low 19.90, so it did go back and test under 20 in terms of the lows. And the high 20.47, about 7 cents off the lows. So traders, what about silver? We are absolutely looking to issue a buy signal in gold, and silver has been moving, and it's been moving and outperforming gold as of recent. You can absolutely see this spike that we had in the market over the last couple of weeks. This, of course, being a weekly chart, we have surpassed some of the major points of what should have been, or could have been, I should say, some sort of resistance, especially about 1850. As the market moved past up, our next real level is about 2075, and that's a 61% retracement of this move from 25 all the way down to 14. So it's a rather long fib cycle, and my sense is that we have the silver and gold market moving in tandem, but we certainly have different elements at play. I'm really curious to see if it flies through this area. If we get the breakout in gold and get that confirmation, and we have silver trading above this particular point that I'm now earmarking as potential resistance, we would look to add silver to the mix and also issue a buy signal. So traders, as we talked about at the beginning of the show, we've got our first real signs that a potential bottom has formed. We talked about the Fibonacci retracement level that these lows went to. We talked about a specific candlestick pattern that simply needs to confirm. We will send out a special trade alert via email as well as text message as soon as we pull the trigger on this next trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.